Good evening to both of you, and thanks for coming through. Now, everyone has been talking about business confidence. But is it a given, though, that once a country improves on that, then investment automatically comes?
It's not a given, but one knows that the formula is you need to have that confidence in order for it to filter through into action. So definitely it's one of the reasons why people feel that is one of the big pillars that will assist.
Well, I'm asking this because we've seen higher levels before, but they weren't necessarily followed by investment. I mean, I remember for the longest time, COSATU complained about what they called an investment strike.
You know what, Will, I think where we are today, our economy is in a desperate situation. No matter which way you slice the data, we've got high levels of unemployment, 9.7 million unemployed people, an unemployment rate of 41% for black Africans, high poverty rates for black Africans, 64% according to the Stats SA Poverty Trends report, and also you saw in Time magazine the highest inequality in the world. Now, in the election, I didn't see any of those issues get a lot of discussion. Nobody talked about climate change, which is a major issue globally, and we've seen children marching throughout Europe about climate change issue. None of that was in South Africa. And in terms of the president, in terms of business confidence, to answer your question, our economy, the president has been here for more than a year, 1.5 years. We had a recession, his first 2 quarters of last year, and the economy is going to, in the first quarter of this year, the economy is going to decline. We're going to see a decline in GDP. So what has happened in South Africa over the last decade is that our economy has not grown, 0.2% per capita over a decade, and the slowdown has accelerated over the last 4 years. So what we've seen now, you talked about investment. What I worry about is that we've had a public sector investment strike, and it's not a private sector investment strike. We've had a collapse of public sector investment between 2015 and 2018. Public sector investment dropped by 18%, and that has been a major cause of the slowdown of the economy over the last 4 years.
So, and both of you from, your writings and utterances believe that infrastructure spending is one of the surest way of unlocking growth.
Absolutely. So if we look at last year, the FDI that we actually saw coming into the country was multiples of what we've seen in previous years. So we went from $17 billion to closer to 100. So clearly the president has been doing a good job of making investors believe the story. And I truly believe that that can filter through into stickier cash. And that's the kind of money that we need, the kind of money that goes into infrastructure and not just the portfolio flows that go into fast money and can go in and out of the country. So the stickier money is where we can create jobs and have more sustainable growth coming through. Now,
you have put a figure to the stimulus package that you believe is...
Yes. So our economy is growing at a trend of 1% for the past 4 years, and we're going to grow at less than 1% again this year. So at what point do we decide that something has got to change? We can't just wait for this investment, the business confidence, because wherever I've looked at economies, it never turns around just on sentiment. It turns around by higher growth figures. And I've said that we need, throughout the world, when an economy is in this situation, there's a limited amount of tools that you can use. You can use monetary policy, lower the cost of capital, or you can use the fiscal stimulus, or you can use the exchange rate. There is nothing that can turn around the economy in the short term except those 3 instruments. Now, there are structural reforms that people talk to, but the structural reforms never deliver growth in the short term. I think all economists, including the IMF, agree that the structural reforms that all the media is talking about, they cannot deliver growth in the short term. So Cyril Ramaphosa, I believe, has to come up with emergency measures to get this economy going. And let's be frank, let's be honest, the president has really not said much about the economy in his campaign and also over the past 1.5 years. The signature policy, the only policy that he's come up with is this investment drive to raise $100 billion, 1.4 trillion rands. And quite frankly, the policy is a non-starter when the government is the one that is cutting back on investment, because private sector investment follows public sector investment. And that's what happened in South Africa during the last boom between 2004 and 2008.
Should we borrow more? Because otherwise, where else is this money going to come from?
I don't believe we need to borrow more. And I think where I would have a positive spin to the story is that one of the levers that you mentioned is the currency, right? And we can initiatives such as improving our exports, and we've seen vehicle sales have been improving, especially in the export market, and 60% of it going to Europe, for instance, is quite positive for South Africa, and this will be positive for current account balance, positive for the rand. So these are the sorts of levers that are there for the president to pull, and the advisory unit that was announced in the last day or two gives you a sense of comfort, because this used to be there in Becky's era, and they used to implement and talk about policy and actually have it in the presidency, and that's coming back. So that gives a bit of a positive spin to the story.
But you are arguing that we should borrow more.
Yes, yes. So I've said, look, so generally what happens is you have fiscal stimulus, and the stimulus is not what the president announced in September last year. A stimulus is the injection of new money into the economy. So I've said we need a stimulus, about 3% of GDP for 3 years. It's about 500 billion rands, and we have to innovate to create this money. So there's a number of options. Number one, just to quickly, Vuyo, our debt to net loan debt is about 47% of GDP. That's not high by international standards, so there is room to borrow more. And basically, when you spend it all on infrastructure and not on consumption spending, the multiplier is about 1.9, according to National Treasury. The second issue, we can innovate in terms of, there's so many things we can do. Let's say, I believe that we can restructure the balance sheet in terms of our pension fund. It's overcapitalized in terms of the money that we have in the pension fund. It's about 300 billion rands overcapitalized. And then there's other things we can do. I think the Reserve Bank can create money, can finance some of the stimulus. And also, we've got a very deep private sector, 9 trillion rands in the private sector. I believe that we can have an accord with the private sector where we can channel some of the investment towards developmental investments. And I think if we have a voluntary investment accord with the private sector, with ABSA and companies like that, I do believe that it would achieve the same objectives as what the ANC is talking about in terms of prescribed assets. Yeah.
Do you believe that we should borrow more?
No. Absolutely not. So until you've got GDP actually coming through, it means all our metrics will be out of sync. So the ratings agencies, we all talk about the fiscus, the leakage, all the issues that we've had. So up until a point where we start seeing growth coming through, we definitely should not borrow more.
Well, if your past comments are anything to go by, you don't believe we should be listening to ratings agencies?
You know what? Bloomberg did a study. There's been a number of studies that what happens to a country after a ratings downgrade, and they looked at I think about 300 ratings actions that happened in countries, and I tell you, Vuyo, what happens is that the cost of capital goes down after a downgrade because the market already priced it in. Because if you look at South African cost of capital today, the cost of capital is higher than Brazil, which is junk. So we are rated already at junk. So if we are downgraded, I don't think it's a train smash because we are already trading at junk. But what I want to say is that Tsitsi is saying that we must wait for the growth. But the investment is what creates the growth. And if we borrow more, there's a multiplier effect of investment spending. So for every rand you put into the economy, we had it between 2004 and 2008 when investment was increasing by about 12% a year, and we created 2 million jobs in the South African economy. And those jobs were created in all sectors of the economy except mining and agriculture. So I think we must just go to what happened between 2004, the only post-apartheid economic boom. It actually started in 2003, and we must implement the same kind of policies that happened here.
Well, in one of his writings, he brought up the role, and I'm sure you heard him right at the beginning as well, where he spoke about the role of the Reserve Bank. Now, I mean, the Reserve Bank has a considerable degree of independence, and autonomy. Duma Qabula makes it sound like, the president can call up the Reserve Bank or the Minister of Finance and say, hey, forget about your constitutionally mandated role. Here's what we need to focus on now and do as a president. He even cites a letter that Pravin Gordhan wrote to the Reserve Bank back in the day when he was a finance minister. Do you believe that the Reserve Bank can play a role? Perhaps not so much in the manner that Duma Qabula suggests, but Do you believe they have a role, given their mandate currently?
So given the current mandate and given the current MPC as it sits, I don't think it can happen quite in that manner. It can always shift around depending on the constitution of the composition of the MPC and how these things play out. But as they sit right now, the current MPC is fixated on inflation targeting. And we understand their mandate and that it doesn't play a big part in what they do as it sits. But there are many other ways. And you actually talked about private sector participation. And this is a good time for the citizens of South Africa to say the mandate has been given and we need to come together. So possibly instead of borrowing as the government, come together, that social compact that you're talking about, come together as business. And you said like ABSA and other banks, we can come together, figure out ways that we can fund infrastructure projects. And this is happening already, but it's just escalating that, increasing it, bringing in other businesses and not just the banking sector, bringing in corporates and trying to find a way where we can actually increase the capex that they're investing in and actually utilizing the cash that's sitting on balance sheets.
That's where we're going to leave it for this evening. Thanks to both of you.
Thank you
for coming through. Director for the Center for Economic Development and Transformation, Duma Kubule, and ABSA's Head Retail Investment Specialist, Tsitsi Hatendi Matika.